The MACD, short for moving average convergence divergence, which is a trading indicator used in technical analysis of prices. It is designed to review changes in strength, direction, momentum, and duration of a trend of a stock or forex pair. I will show you guys a simple and effective trading strategy to use when trading MACD. This strategy has been able to make me hundreds of dollars within hours of trading. Make sure you watch this video to the very end in order to understand in-depthly each concept and unique approach I use to trade this strategy. Without further ado, let's jump straight into the video. Welcome to TradeVox. Welcome back to TradeVox, guys. So here we are on the AUD Japanese yen on the 1 hour time frame. This strategy works more on higher time frame. So when backtesting and testing this strategy, make sure you use the higher time frame, which is 1 hour and above. So before we dive into the concepts, we are going to be adding two indicators to our chart which form our strategy. The first indicator is the MACD. We go to our indicators tab and we're going to search for the MACD. I have it right here on my favorites, MACD, moving average convergence divergence. I have it on my favorites, so I'll be adding it to my chart. The second indicator we are going to be adding is the moving averages 20, 50, 128 and 200 by kickback, and you can just copy it right here and search it. It shall be shown, but I have it on my favorite, so I will just be adding it to my chart. Once all done, you're going to be looking at the chart in a colorful way, but we are going to be setting this indicator up so they will be able to accommodate our strategy. So we go to the moving average settings, and under inputs we are going to be taking the exponential moving average. While on the style, we are going to be on taking the moving average 50 and the moving average 128 because we won't be needing them for this strategy. We are also going to highlight the color more. For moving average 20, I like mine to be blue, and moving average 200 more neutral black. Once all done, we have our moving averages set for this strategy. We head over to the MACD settings, and in the inputs we are going to leave everything in the default settings, but we will go to the style and we will untick the histogram. That is because we won't be needing the histogram for this particular strategy. We are also going to be increasing the thickness in our moving averages in the MACD. So once done, we are going to be having our charts looking better right now. So before I head over to examples, let's understand the concepts of the strategy. What are we to look out for when trading using this strategy? First things first, we are to know that this strategy is to locate potential price changes in the market or retracement in the market. That means if we are in an uptrend, we are going to be taking sell retracement or sell change of trend. Why if we are in a downtrend, we are going to be taking buy change of character or buy retracement. So we have our moving average 200, which is going to dictate the overall trend. And as you can see, we are in an uptrend. Why? Because moving average 200 price is above moving average 200 as well as our moving average 20 right here. So we are in an uptrend, and what are we to look for using the strategy is retracement or potential price reversal changes. So for us to enter a valid sell trade, we must wait for the moving average 20 to be broken by price. That is, price has to close below this moving average 20, and our MACD indicator has to cross over to the downside. As you can see, this MACD line has the orange and the blue. The orange line has to cross over to the downside for us to take a valid sell trade. Once that is done, we are going to be entering our sell positions from where the price broke the moving average 20, and our target is going to be moving average 200, while the stop loss is going to be slightly above the moving average 20. Once that is done, we all just have to wait for the price to show its magic, and we are going to be making profit. So let's look at an example in the chart before we go to the live trading and see how it is done when the price is in motion. So right here, we can see that the moving average 200 price is below the moving average 200, making it a downtrend, and price is also below the moving average 20, making it also a downtrend. What are we to look for? We are to look for price breaking above the moving average 20 and waiting for a MACD crossover confirmation. As you can see right here, the MACD clearly crossover where the moving average was broken. So we are going to be taking our buy positions from right here where the price was broken, stop loss slightly below, and we are going to target the moving average 200 as our take profit. As you can see, guys, this touched our take profits easily. Let's look at another example right here. At the very opposite, we can see a clear break to the downside. Moving average 20 was broken to the downside. We were in an uptrend. How? The moving average 200 price was above the moving average 200 as well as the moving average 20. So we were in an uptrend. Price broke clearly below the moving average 20, and we have a clear signal from the MACD indicating that we are going to be selling. Why? The moving average crossover in the MACD. So we will take our sell positions right where the price was broken and right where the MACD crossover. We are going to be taking our stop loss slightly below the moving average 20, and our take profit is going to be the moving average 200. Let's look at one last example before we go to the live trading. Okay, here we can see we were in an uptrend. Price was above the moving average 200 as well as the moving average 20. We had a break to the downside in the moving average 20, and we had a clear confirmation by the MACD crossover to the downside. So we were going to take our sell position at the price where the MACD crossover and the moving average was broken, stop loss slightly above the moving average, and we are going to be targeting moving average 200 for our take profit. And as you can see, this was a win. Guys, this works on and on, guys. So let's head over to the live trading and see how it was done when trading using this strategy. So here we are on the live trading. We are in the USD CAD on the 4-hour time frame. Remember, I told you this strategy works better on higher time frame, guys. So what can we see in the price? What can we see in the charts right now? Price is in an uptrend. Why? The moving average 200 and the moving average 20 price are above them. Price is above the moving average 20 as well as the moving average 200. So what are we to wait for? We are going to wait for sell retracement or sell change of trend alongside our MACD crossover as confirmation. So let's see what the price did for us in the long run. Okay, here we can see a clear crossover from our MACD indicator. But the moving average 20 wasn't broken. Right here at this particular point in price, we can see it was just a wick, and it is going to be very ignored using this strategy. It must be half of the body of the candle that breaks the moving average 20 before we can enter this trade, as well as a crossover confirmation from the MACD. So let's see what this price did, if it gave us an opportunity to enter the trade. Okay, right here, a very perfect example of this strategy. Price closed clearly below the moving average 20, half or more of the body of the candle, as well as the MACD confirmation crossover. So we will be taking our sell entries right at the body of the candle that broke the moving average 20, and we are going to be targeting moving average 200 for our take profit. Stop loss, as I said, slightly above the moving average 20. So let's see how this strategy gave us cool cash. Okay. Guys, we can see how this take profit was smashed and how this strategy works effectively. Now let's look at a buy trade. Let's look at the buy trade too. Okay, for the buy trade, we can clearly see that we were in a downtrend. Why? The moving average 200 and the moving average 20 price were below them. Price was below the moving average 200 and the moving average 20. So let's see what price is going to give us. What we are looking for is a valid break to the upside. That is a valid break of moving average 20 and a clear crossover from our MACD indicator. So what the price give us? Here we can see a clear crossover from our MACD. What? We are not going to enter this trade. Why? Because our moving average 20 is not broken to the upside. We have to wait for the moving average 20 to be broken before we enter our trade. And right there, 50% or more of this candle broke the moving average 20. So we are going to be taking our buy trades right there. Stop loss, it's a very tight spot, and our take profit is going to be the moving average 200. So let's see how price played once the strategic conditions were met. Once you have a valid setup, don't be afraid to enter your trade, guys. Most traders are always afraid to enter their trade, even though they have valid setup of a certain strategy they are using. Just make sure you use money management. Make sure you manage your risks, because a lot of traders fail to manage their risks and they are going to be liquidated. So always manage your risks and don't be afraid to enter your trade setups with good faith. Now, as you can see, our take profit was smashed once again. As long as you obey this concept of the strategy, you are going to be profitable in the long run and making a lot of money like I do using this strategy. First, price must break the moving average 20, either to the upside or to the downside. Then the directional bias crossover from our MACD is going to tell us where the price is going to go in the meanwhile. Take profit is always going to be the moving average 200. Doesn't matter if the price continues to go up or change trend directly. So hope you guys understand and enjoyed this educational video. Make sure you like, subscribe, comment, and turn on the notification bell to never miss trading educational content from TradeWorks again. Be patient, make sure you manage your risks well, don't force the markets to give you signals. If you force the market to give you signals, then you're in the wrong path as a trader. Be profitable and trade less but effective. Make sure all your trades stick together and all your confirmations are aligned. Well, we have come to the end of today's video. See you guys in the next video. Peace.